let me run through Bollinger Bands and Keltners. Now, Bollinger Bands and Keltners, I like these. I don't use these to make my trading decisions. However, they basically provide an envelope for price. And they're very similar. Bollinger Band is based on a standard deviation. Keltner channel is based on an average true range. I personally prefer a Keltner channel. It doesn't really matter. They do very similar things. What they're doing is they've got an average price in the middle, like a moving average, and then around them you've got an envelope based on a setting that you use. So for Keltners, I'm going to use a 2.5 period or a 2 period, and it's the same with Bollinger Bands. They're going to give you a bracket to work around, and the way that I use them is that if we're on a daily chart, I won't chase price if we're at the upper band. You can see how often we tag the band and then that's it, we roll back. Or if we tag the lower band, we don't go much further. We have to unwind a little bit. We have to retrace to the mean before we can get going. So if I'm really interested in the market and it's right, it's up a Bollinger Band or up a Keltner, I'm not going to go long. I'm going to wait for it to at least retrace a little bit before I go long, because generally it will contain price. Not always. You're going to get time periods where it does hug that upper Bollinger or lower Bollinger, or upper Keltner and lower Keltner, but I like to use it as a guide. I don't use it so much on the lower time frames because you can stay out of it for such a long time. It's more powerful, I think, on the higher time frames like the 5 and the 15 minute if you're day trading. So you can see how it bounces up and down off the upper and lower Bollinger Band. Use it as a filter. It's a really great little tool. But as with all things, I would recommend not clouding up your chart too much with it. Know where you are, where price is in relation to the Keltner channel, and then take it off the screen and say, okay, we're at the lower Keltner now. Where am I going to get involved? Okay, I want to get involved short, for example, here. Let me see it unwind. If it unwinds a little bit, 20 ticks or so, I've got to know I've got a bit of downside because the lower Keltner's giving me a little bit of room to breathe. Obviously, if news comes out, forget it. It's just going to rip through all these levels and it's just going to do its own thing, which is why supply demand is the most important thing. If there's massive supply coming in, you're going to see the market fall through the floor regardless of what your indicators are saying. Similarly, if there's huge demand coming in, it's just going to rip to highs. No one's going to care what any oscillators and moving averages, Keltner channels are saying. And of course, that's where the power of volume comes in, because we can see that we're in new volume territory, fresh highs, good volume coming in, holding above. Everything's looking very good. So those are just a few of the tools of the trade. There are hundreds and hundreds, and it's all about finding the one that best fits your personality and fits your style. What I will say is this: I know traders who use different types of indicators. I know guys who have made very good sums of money trading from 1 or 2 indicators. I don't know anybody who has made good money from using loads of different indicators. So that tells you something, is that you find an indicator that fits your personality, style and trading method, and then you stick with that and you don't try and cloud it with different indicators, because what will happen is you get conflicting signals. Your moving average says buy, your oscillator says sell, and you don't know where you are. You need some conviction.